Hey, wow, 2024 is behind us. Happy New Year. In this video, we're going to talk a little bit about strategies for 2025 and what I think might be a good opportunity for making money in 2025. So we'll talk about all of that. But first, I think it's worth noting that I may have been, well, I think I was, but it depends on what happens in the future, a little bit early, which is much like what my wife tells me. I always come through, but I'm often too early. And so my big F up in 2024 was probably being just too early to what I still think is coming our way, which is not ideal because we don't want it to happen. I'll give you a quick overview of some of these calls, where it went right, where it went wrong, but then I really want to talk about what I think is the future and what will do well in 2025. So we'll talk about that. First, you know this. I mean, many of you have been watching the channel for a while. You already know that we called the crash in 2022 once the Federal Reserve had the disastrous January U-turn. That led to the sort of big flip-flop that people said, where it's like, oh my gosh, Kevin sold. Really grateful I did because it saved a lot of downside. Then I did start rebuying at the end of 2022, and I called for a Nike swoosh-style recovery, as I thought that people would sort of get used to the idea that inflation was actually falling, that we were starting to get disinflation. Not necessarily deflation, like prices coming down, but that inflation was mostly under control. And I said there would probably be a euphoric rally at the end of that Nike swoosh recovery. Well, we got the Nike swoosh recovery, and now a lot of people say we're in the euphoric rally, especially for Tesla and companies like Palantir. But I didn't time it perfectly, and this is unfortunate because even though these were all absolutely correct, I ended up believing that we were closer to recession during the Japanese yen carry trade crisis in August, when we started getting some pretty nasty employment data. And unfortunately, that led to too early of a recession hedge trade, if you will, which the hedge trade for recession is really simple. You buy long bonds. Short-term bonds don't do that great because their price doesn't move up that much in a recession. So usually longer-term bonds do better, and this is where a lot of people plow into trades like a TLT. The problem is, and this is what I didn't expect, the next few months of employment data got boosted by government jobs data, and frankly, the election of Donald Trump led to fears that we were going to get a second wave of inflation, whether from tariffs or from businesses just potentially booming under Trump again. And people still today believe that, and because people have that belief, there are a lot of institutions and hedge funds that have started to short and continue to short longer-term treasury bonds. That depresses the price for a trade like a TLT, which isn't great, obviously, if you're using that as a hedge trade. Now, how could potentially TLT be used as a hedge trade? Well, this is what you have to evaluate its benefits for. Let's take a look at this. This is how TLT works well. So TLT goes up when bond prices go up. That should be pretty simple, right? This also correlates to the 10-year treasury yield, even though TLT is really like a 25.5 year maturity, roughly, the last time I checked. It correlates to the 10-year treasury, basically longer end, coming down. So when I started making this trade in July, I actually made money on this trade. You know, I was up somewhere around 25%, which was great. Unfortunately, once the Fed started cutting rates, we started seeing this trade get killed. Why? Well, because as the Fed cut 100 BP, we saw the 10-year move up 100 basis points as opposed to continuing to move down, which is really unfortunate because there really aren't actually ingrained signs that we're going to have a resurgence of inflation at businesses, whether you look at services, whether you look at consumer packaged goods, or just basically things people are buying, autos, TVs, products companies are selling. There's more evidence of deflation than there is evidence of a second wave of inflation. But that doesn't mean the trade still isn't getting decimated. So TLT, while it was up at 1.25%, now it's down like 50% in terms of a trade. But here's how it works. TLT works really well when there's a recession, much like gold. TLT also works okay in a soft landing. TLT works terribly if the economy keeps booming. And so far, it's felt like the economy has just kept booming. Now, this is really good for startups. So don't get me wrong, as somebody who runs a startup like HouseHack, I'm really, really excited that the economy at the moment seems like it's booming. Now, I don't think it will last. Mostly, I'm not going to go through all the whole recession thesis in this video, but basically, I think on the horizon, the storm clouds are there. 27 weeks unemployed, rising unemployment claims, rising unemployment rate, the fact that most of the jobs that we've created have been government jobs right before the election, which makes sense. They don't get seasonally adjusted out, but they're probably overstating the amount of actual jobs our economy is creating. Given that Bloomberg Intelligence also thinks we are overstating payrolls by somewhere around 90 to 110,000 jobs per month, which I just stated a couple days ago, you're kind of in a place where at some point the reckoning is probably going to come in the jobs market, which I really, really don't want to see, because I remember what it was like in 2008 when everybody around me couldn't get a job. They were losing their jobs. Unfortunately, and obviously people's portfolios were getting decimated. Things were really bad. People don't like that sort of environment. It's a really, really tough and depressing time. That's why sometimes recessions are called depressions. Well, also because prices fall more in a depression. But anyway, when unemployment rises really substantially, you can rapidly go into a depression. And unfortunately, I think the storm clouds of that are building. And artificial intelligence will just add fuel to the fire of whatever recession or depression we have. That's because usually in a recession or depression, you have prices going down, you have rapid deflation, which, yes, many of us are going to want that deflation, but it's not going to do us any good unless we have a bunch of money saved up, because if we don't have money saved up and we don't have a job because we've lost our job, then you're not going to be able to afford those lower prices anyway, which sucks, because then it's like, oh, if real estate prices go down, which we'll talk about that in a moment, or stock prices go down, how are you going to buy if you don't have cash or a job to keep funding that, right? So this is where what's interesting is, as a hedge, TLT actually works really well in a recession, much like gold. But the problem is gold, in my opinion, doesn't work as well in a deflationary recession. It usually works well when you're facing inflation, like in the 1970s. Either way, though, gold and TLT can work really well here. TLT also works okay in a soft landing. Gold's obviously come up. It started stagnating, but recently we've started seeing a little bit of a pickup. Risk assets obviously do very poorly in a recession, right? Risk assets down. This would be, I mean, just think back to the Japanese yen carry trade, how much pain there was in the stock market, and how quickly there was pain in the stock market when it looked like, oh my gosh, we were starting to price in a recession. The stock market can fall very, very, very rapidly, especially at where valuations sit now. Palantir trading for like a 10 peg, it's insane. It's a great company, don't get me wrong. Same thing with Tesla, great company, but the valuations are just kooky right now. So there is a lot of risk sort of baked in. And there's also this fear that people think, hey, if you want to take profits, maybe you take profits in 2025 because hopefully Donald Trump will lower taxes. No guarantees though. But some people have argued that there'll be less profit taking at the end of 24 and more in 2025 because of this. But anyway, what's really interesting about all of this is artificial intelligence could enhance the future recession, because it's going to be so much, the barrier is going to be potentially so much higher for businesses to hire workers, because they can use artificial intelligence to enhance the productivity of their existing workers and potentially reduce the need to hire more workers. Think about customer service agents. I mean, they're getting wrecked by artificial intelligence. Klarna has just completely stopped hiring people, and they expect to lay off as much as 75% of their staff thanks to artificial intelligence, which I also think, this is just my belief, but I also think that the AI boom has delivered us very, very smart encyclopedias, basically a quality version of Siri, but, in a voice-generated GPT, essentially. These are fantastic. As far as how much they're going to actually help us with drug discovery or anything really beyond like customer service and encyclopedic information, I'm not convinced. I don't think the progression that we are seeing in artificial intelligence is exponential. I think it's more like a stair stepper where it's kind of like, wow, a GPT moment. And, everything kind of ran up to that moment and then we kind of stagnate there for a while, which probably won't do too well for continued server expansion, chip expansion, valuations at companies like maybe NVIDIA, AMD, or whatever. They're great if we can continue to sell the amount of chips that we're selling today. And yes, NVIDIA's valuation is supported by earnings today. But what happens when we are no longer buying as many NVIDIA chips because we don't really need to keep that NVIDIA or AI boom going? If all of this comes together with the layoffs in election workers, the slowdown in artificial intelligence, the realization that the jobs data we've been getting has been bad, the realization that the inverted yield curve usually pushes us into a recession once we uninvert by 50 to 90 basis points, which we're like 30 basis points uninverted now, so we're getting closer. And when we look at the trajectory of employment data, and once these revisions all come in, things aren't really looking good for avoiding a recession, which continues to make TLT a desirable trade, in my opinion, as a hedge. The non-recession play, though, is go make money at your work as much as you can. Make money while the sun is shining. Make hay while the sun is shining, as they say. And this is what I always motivate, hopefully, you to do, is think of what can you do to look at 2025 and say, I'm going to make as much money as possible so that way I can invest if prices fall. Otherwise, maybe you're buying the dip. Who knows? I think it's also worth mentioning that I think some banks and mortgage lenders may end up doing really well in 2025 if, A, you don't have a residential housing crash, which I don't think you have. B, you continue to get deflation or low inflation, which I think we are going to get, especially as joblessness continues to ramp up. And 3, you end up in a place where you start leaning more towards a recessionary environment and the Fed is actually forced to really drive down rates. Those would, in my opinion, not only help mortgage companies do really well, especially those that focus on residential loans, less likely to default, but then they can capture refinances, but could potentially also help smaller banks. So I'm paying a lot of attention to smaller banks in 2025, and I'll be sending some alerts to course members on specific banks that I'm looking at, because I think as rates start trending down, banks that haven't gone broken yet would actually be supported by falling rates, refinancing, an upsurge in lending. So while I'm usually not super excited about the financial sector of the S&P 500, 2025 could be the year for banks, mortgage companies, and bonds. So keep an eye on that. I think the Federal Reserve is convinced, or should I say committed to, not allowing a single bank to fail. Some ideas for you to think over. But 2025 is very exciting to me because while there were some good wins in 2024, I wish I had more. I know this sounds crazy, but let me go through some of these. So I did some wonderful things in 2024, and hopefully they're motivating to you. But I had triplets, so I have 7 children now. Very excited about that. Summer is alive, which is great. That took a lot out of me when there were 3 months of uncertainty for her. We raised over 8 figures for House Hack and deployed over $50 million into properties and renovations. We also just started ADU development and raw land development, which is really cool. I think we're going to launch our Regulation A offering hopefully in February for non-accredited investors. So if you want to be a part of House Hack, stay tuned for that. No guarantees on the timing of that yet. It's all sort of SEC dependent. But House Hack for me is going to be a big driver in 2025. Very excited about that. I don't actually see real estate prices, especially in single family, collapsing, even if there's a recession. So unfortunately, I think a lot of people might lose their jobs and we might become more of a renter nation than I see real estate home prices collapsing. I could see stock prices falling substantially more rapidly than home prices collapsing. I actually think if there's a recession, interest rates will truly come down rapidly. I believe that by 2032, we'll have lower interest rates than we've ever seen before. And owning real estate will be most valuable because your ability to refinance these at interest rates under 2%, in my opinion, we're going there, will be really desirable and actually supportive of asset prices for houses, but not for tenants. They'll be supportive for people who can actually afford to buy those homes, specifically wealthier landlords. Now, I think that's bad, but I mention this as a signal to you to consider getting into real estate sooner rather than later. I don't see that there are significant defaults coming to single-family real estate or residential 1 to 4 real estate. Now, remember what we do at House Hack. We want to be the best landlord in America and eventually even sell these homes that we renovate that are unlivable to tenants. So we don't want anybody to think that we're taking homes away. We're actually bringing supply to the market. We're taking homes that are unlivable and bringing them to the markets, which helps lower rents. And then if we end up selling, well, then we're contributing more inventory to homeowners, right? So we think as America's best landlord, we're providing a true service, especially if we're building ADUs and adding inventory and supply. But I do encourage you to get into real estate, and I want you to know I'm putting my money where my mouth is. I just invested $5 million of my personal money and Lauren's personal money into House Hack's latest fundraising round because we believe so much in what we're doing at House Hack, and we believe so much in real estate as the true value going forward, especially where stock valuations are right now. It doesn't make sense to take $5 million and go, I'm going to buy stocks right now, in my opinion. That doesn't mean I'm not, funding my children's retirement accounts, which potentially could go into the S&P 500. But, certain like 529 plans, you have to pick, basic options that you get from Fidelity. You don't get too much discretion. But, I actually had my children's 529 plans go into bank deposits for right now. They yield 4.5% or whatever. It's like a money market. And eventually, if there's any kind of correction, then I'll take the money and take the kids' funds and buy the dip on like the S&P 500 or whatever. But not right now. I'll wait for us to get closer to the 200-day moving average. But ADU development, big fan of it right now. I think there are great opportunities to do that, and I think contractors have enough time right now. There's not I think there's a lot of availability for contracting right now. That's at least what I'm seeing, and there's a lot of desire for real estate agents to send you deals. And I think we'll see more inventory come to the market now that we're in Q1, which will be very good for real estate and opportunities to buy. Since sometimes in December it should be a good time to buy, but there's so little to choose from. It's kind of like. Really? Do I want to settle on that? So then you just wait for like January, February. Things really ramp up with home buyers buying, usually in March. So you still have January, February. 2024, I hit 16 years with Lauren, which is really cool, in December actually. Launched a robotics VC. We raised over 7 figures. We're investing a good chunk into a robotics private venture opportunity that I've already been invested in, and they're doing another really big round, a VC round, and we're going to be part of that, so that's very exciting. 2024, I became a pilot, started golfing and bowling with Max and teaching them skiing. Max went from skiing on greens to doing his first, and falling on greens, to doing his first Black Diamond run just yesterday, which was very, very, very cool. Stopped drinking at about 100 days of not drinking. It's been tempting, but then also not. So it's kind of gotten to sort of this weird place where I'm like, I'm good. So, yeah, it's interesting. I've become a lot more patient, reading more, able to sort of self-reflect more without taking criticism to heart. I feel like everything I do is of the utmost integrity. And yeah, I make mistakes. Being early on TLT wasn't a great move, but for what it's worth, I still think it is the move for the next year. We'll see, though. We'll see what comes out with this job data over the next probably 2 or 3 months. If we can get through the next 2 or 3 months without recessionary jobs data, we might be okay. We might be able to dodge it and actually stick the soft landing. So the next quarter here will be pretty critical for that. We also, in 2024, bought the house next door, which is kind of cool because it avoids sort of destabilizing the kids. When I was a child, I moved endlessly, and I never really had a stable friend group or school. So it's really nice to be in one particular place. Somebody actually sent us these. It was very nice. They have an Etsy store. Somebody sent us Meet Dad and Meet Mom. So if they're watching this video, you should leave a comment with your Etsy store, and then I can pin it. That'd be maybe y'all can find it and upvote it too. Meet Mom. It was cool. Thank you for sending that to me. Very cool. What else? 2024, I launched a new course called Trumponomics for 2025, how to invest in tax strategies for real estate, stocks, trade alerts, and everything. That's over at meetkevin.com. I've got a New Year's sale going on through Friday. You're welcome to check that out. Launched the free alpha report. You can get that over at meetkevin.com. Significantly worked on something special with FINRA as well, some broker-dealer work, so that's pretty exciting. We're going to keep that going this year and continue building the team that we have. We've done a lot of consolidating and refining of our team. We've got a really, really good core team now, so very grateful for that, and we're going to keep this going in 25. I think for YouTube, my goal is to get a lot more content out as well. In 2024, I realized I posted a paltry 1.1 times per day, which is 1/4 of my 2020 and 21 average. So I really got to step it up again. I want to get into, I've read a lot of your comments on what you'd like to see, so I want to focus more on news, analysis, real estate, specific stock analysis. For example, like, hey, MicroStrategy. They've been buying stocks for 12, they've been buying Bitcoin for 12 weeks straight. Are they going to buy for the 13th week straight? They've got about $45 billion of Bitcoin, and their market cap has fallen to just $71 billion. They used to sell for like a 3x multiple of the Bitcoin that they have. Now they're selling for just 1.5 times a multiple. Find that very interesting. But they also issue a lot of convertible debt, which the cool thing about convertible debt is if the stock keeps skyrocketing, cool. People get to participate in some of the upside after. I think the stock at this point would have to probably double or more for people to actually get some upside in the latest convertible bond rounds that they did. And they're at 0% interest, which is crazy. But if, Bitcoin or MicroStrategy don't keep going up, then into 2029 or 2030 or whatever, then at least people are promised their capital back via a convertible bond. Unless, of course, MicroStrategy goes bankrupt. That similar style, by the way, is what we're doing with HouseHack. We raised money for accredited investors at househack.com with a convertible bond where if you buy it, you get paid 5% interest and you get 100% of the upside in the stock for whatever it goes up. It's pegged to what we think is a relatively low valuation, which is really exciting. So we think we're giving people a really good deal, but it's a win-win. Investors get 5%. But we're also borrowing for real estate at 5%, which is cheaper than what market rates are right now. So we see that as win-win for both sides. But anyway, the Reg A round hopefully will be similar. Stay tuned for that in about February. We're supposed to hit a debt ceiling again before inauguration day, which is crazy. But anyway, these are some of the sort of looking back to 2024 items. 2025, really looking forward to, again, more content on YouTube, bringing you more value, bringing you hopefully more inspiration, whether it's updates on what's going on with hedge trades or just long-term investments. Not just long-term investments, but where there might be value plays, where there are updates in the real estate market, what's going on in the news world. At the same time, I want to balance that with spending more time with my boys who are now, Max is about to turn 7, and then Jack, who's 9. Again, why I've started bowling and golfing with Jack and Max and skiing. I plan to, as a pilot as well, get my instrument rating, multi-engine rating. One day, maybe we'll even get the ability to fly the plane that I own, which is a jet, but you've got to get type for that, and so that's a little bit more challenging. So a lot of exciting things going on. But I'm not going to hold back. 2025, some of the goals I've got are to wake up, and these are some of the sort of, how should I put it, I wouldn't really call them New Year's resolutions, but I just call them sort of daily objectives that I have. I'll put it that way. So one of them is to try to, as much as possible, and this is challenging, be calm around the kids. Sort of like stoic to the madness. And that's because, especially when you're traveling alone, like I traveled alone with Jack and Max for a 5-day ski trip, and it's really difficult when, let's say, you're trying to solve a problem, whether it's you got an email or a phone call or even just fixing your ski booth. But then Jack has a bunch of demands, and then Max has a bunch of demands. And, and so responding calmly to this, especially when things are frustrating, can be very hard. But I think it's really important as a dad to grow and so always maintain calmness. So I've been getting better at that, although I want to be even more perfect. I will make it a goal every single day to just continue waking up early. some of this has been messed up with ski vacation and piloting and such, but I had been waking up consistently around 3 a.m. I want to get back into that routine. So also, you know, try my best to make sure I sleep at least 6 to 7 hours a night. Really important. Once you start getting under 6, you start having a lot of problems. Things just don't go well. As well as, of course, continuing to focus on health and fitness, making sure to get that cardio in, getting some body weight work in, but also maybe free weight exercise, or that would be very good. And ultimately continuing to deliver value to y'all with the daily wealth email, which hasn't been as consistent in the last month of 2024, and that is my fault. That will be back to consistency, as well as the alpha report every day the market is open. As far as plans for live streams, I think what will work best at the moment is doing market open live streams for course members and going back to somewhat more of a consolidated live stream schedule where I'm consistently live for course members, but really only going live if there's breaking news for the public. Mostly because what I find is if I go live on a public video and then I go live for course members, then I've got to get my team started, all of a sudden my entire morning gets a lot less productive, and it's a lot harder to continue to produce content. And I feel like that actually ends up robbing my viewers value that I could be providing. So we'll be consolidating that. And remember, you could just have lifetime access to those course member live streams if you want. Just join Trumponomics over at meetkevin.com. So yeah, those are some of my plans. Some of my goals. Some of the tasks that I'm focused on, and we'll take it from there. So that's to a great 2025. I wish the best for everybody, and honestly, I do wish that we avoid a recession. I don't think it will go very, very well. I think it'll be pretty dark and dirty. But hey, you know what? I always like to say, don't get caught up in your oopsies. Try to focus on your W's instead, because otherwise you just end up depressive and broken. And ultimately, if the only thing you're sad about is $1 in a bank account or in your stock brokerage account, at least you're not dead or, you know, have some terrible terminal illness or your family's dead or dying or something, right? Like, things could be a whole lot worse. You know, my heart goes out, for example, to the people who died in a terrorist attack today. Horrible. So, I don't know. Hopefully that adds some inspiration. So, thank you so much for watching, and we'll keep bringing you value. Appreciate y'all.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
See you soon. Goodbye and good luck.